Dumelang. I will be doing question one. I'm continuing with question one, IEB, November 2022. And question 1C, it's all about fixed assets. And they gave us information about our tangible assets from the beginning of the year, which was the 1st of September 2021 to the end of the year, which is the 31st of August 2022. Equipment, which is the cost price, since you realize they separated the two, equipment and accumulated depreciation are separated. Last year, the cost price of our equipment was 420,000. This year, 600,000. From that, you can easily tell that we bought equipment. But you can't just say 600,000 minus 420,000 to determine what we bought. We could have sold equipment, and that could have reduced that 420 and then increased it by whatever we bought for that year. Now it says the following transactions relate to equipment for the year ended 31st August 2022. We purchased equipment on the 1st of February 2022. That doesn't really help at the moment. Let's read further. It says that on the 30th of April 2022, sold equipment for 45,000 rand cash. The cost price was 80,000. The book value on the 1st of September, which is the beginning of the financial year, of this equipment sold was 30,900. Then they said equipment is depreciated at 12% per annum using diminution balance method. What we're going to do is to calculate the cost price of equipment at the beginning of the year. I will normally say 420 plus X, which is the cost of the equipment purchased, minus 80,000, which is the cost of equipment sold, should be equal to 600,000. When we do that, let's see what we get, right? I did this, which is balance cost at the beginning of the year plus cost that of the equipment we purchased, which is X, we don't know what that is, minus cost of equipment sold, which is 80,000, should give us the cost of equipment at the end of the year, which is 600,000. And you all did math in grade 8, you will just use, well, we call it transpose X. Not transpose, we isolate X and transpose everything to the right-hand side. So we'll have 600,000 plus 80,000 minus 420,000. It'll give us the cost of equipment purchased, which will be 260,000. Okay, number 2 asks us to calculate depreciation on the new equipment that was purchased on the 1st of February. Let's count. It's February, March, April, May, June, July, August. That is 7 months. So we need to depreciate this equipment for 7 months. But it is new. And you would have noticed that we depreciate equipment on diminution balance method. But for new equipment, it doesn't have accumulated depreciation because it's new. It's our first time depreciating it, and we are depreciating it for 7 months. You will take 260 times 12% times 7 over 12. It'll give you 18,200. Moving to 1.8. We need to calculate profit or loss that was made on the sale of asset on the 30th of April 2022. Indicate it if it was profit or a loss. First of all, we were given carrying value of this equipment that was sold at the beginning of the year, which was 30,900. But we used this equipment, okay, from the beginning of the year until it was sold. When was this equipment sold? Let me go back because I didn't record that. All right, there it is. It says this equipment was sold on the 30th of April 2022. So we used it for the entire month of April. So it'll be September 1, that is the first month. October, September, October, that is the second month. It's November, December, January, February, March, April, that is 8 months. So this equipment was used for 8 months for the current year. I will take that 30,900. I don't need the cost price here because I only need the carrying value. We were given the carrying value at boy. Boy means beginning of year. Current year depreciation will be that 30,900 times 12 times 8 over 12. It'll give me current year depreciation of 2,472. Now, carrying value at the date of sale will be 30,900 minus that 2,472. 72. It'll give me carrying value at the date of sale, which is 30th of April. Carrying value on that date will be 28,428. Now, we sold this equipment for 45,000 rand. The carrying value of this equipment was 28,428, giving us the carrying value on the equipment of 16,572. And that is a profit. Okay, it will give us a profit. That's why I'm saying it's a profit. When you take your selling price, you minus carrying value at the date of sale, it'll give you a profit on that equipment. And that is because our selling price, we sold this equipment at 45,000 rand, which is way above the carrying value. The carrying value of that equipment at the date of sale. And that will have been 28,428. That's why we have a profit here. Now, let's talk about the remaining equipment. First of all, we were given cost at the beginning of the year. Remember it was 420,000. We will focus on that. Beside the new, obviously, you will take that 420,000 minus the cost of the sold equipment, which is 80,000. And then you're going to take accumulated depreciation at the beginning of the year, which is 185,000 minus the accumulated depreciation of the equipment sold. But we don't have accumulated depreciation of the equipment sold at the beginning of the year. But we were given the cost of the equipment sold, and we were also given the carrying value of the equipment sold at the beginning of the year. And how do we normally calculate carrying value? Carrying value is cost minus accumulated depreciation, and we're missing accumulated depreciation. It should give us carrying value. Cost minus accumulated depreciation should give us carrying value. So if you take cost and minus carrying value, it will give you accumulated depreciation. I hope that makes sense. So I took 80,000 and I subtracted carrying value of the equipment at the beginning of the year, which was 30,900. It will give me accumulated depreciation of this equipment at the beginning of the year. Note, you can write it this way. 80,000 minus X representing accumulated depreciation is equals to 30,900. You'll end up having minus X is equals to 30,900 minus 80,000. And 80,000 minus 30,900 will give you negative 49,100. But then that negative X will cancel the negatives and you will end up having 49,100, which is the accumulated depreciation. Or you can use it as a table form like I've done above, okay? And you can just you add what you subtracted, you subtract what you added, and it will simply give you accumulated depreciation of this equipment sold at the beginning of the year will be 49,100. Now, when you take 85,000 minus 49,100, it'll give you accumulated depreciation of the remaining equipment. Now, the remaining equipment will give us accumulated depreciation of 135,900. Now, 340,000, which is cost at the beginning of the year of the remaining equipment, minus accumulated depreciation at the beginning of the year of the remaining equipment, will give us carrying value at the beginning of the year of the remaining equipment, which will be 204,100. Now, to calculate depreciation, you will take that 204,100 times it by 12% times by 12 over 12. It will give you depreciation of the remaining equipment, which will be 24,492. Okay. I've made videos on tangible assets. You can go to my page and check them out. I hope I helped you understand question 1C. This is IEB 2022 November exam. Thank you for watching. Please don't forget to subscribe, like the videos, comment if you have any questions. Otherwise, khotso.